Welcome to Businessline's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Welcome to Businessline's State of the Economy podcast. Not too long ago, startups were the darlings of investors. They used to pump funds heavily into startups at very high valuations. But then something changed suddenly. Over the past few years, it has been more like a drought. Valuations have taken a nosedive, and it feels like the money tap has been turned off suddenly. Most startups are struggling to raise funds. It's like going from a high flying roller coaster to desperately looking for funds to stay afloat. So, here is the big question on everyone's mind. Is the funding winter finally thawing out, or are we just getting a few sprinkles after the scorching summer? In this month's startup podcast, we are diving deep into the investment scenario. Let us see if there is a light at the end of the financial tunnel or if we are in for more stormy weather ahead. We have two experts from the startup ecosystem to shed light on the situation. Let's welcome Mr. Dayakar Puskoor, founder and managing director of Dallas Venture Capital. Dayakar is a serial entrepreneur turned investor. Headquartered in Dallas, the fund invested in several pioneering early stage startups in cloud, AI, ML, and mobile technologies in the US and India. We also have Mr. Nishant Patel, founder and CTO at ContentStack. After finishing his BS in computer science from the Ohio State University, Nishant has become an entrepreneur and a serial investor. The startup built a made in India SaaS based content creation and management platform, and it raised $170 million so far in 3 rounds. Mr. Dayakar, Nishant, thanks for joining this podcast this month. Mr. Dayakar, you have been closely following the startup ecosystem. From your perspective, what are the primary factors that are contributing to the current investment climate? Are we seeing a shift away from the cautiousness of the past year, or it is changing?
Thank you. Thanks again, KV. Thanks, my fellow panelists, and congrats, for raising $170 million. Nishant, really, it's a great achievement as a founder, as an entrepreneur. I always see whenever fellow entrepreneurs succeeding. So just kind of give you my perspective. I just want to make sure we are also actually headquartered in Hyderabad too. As you know, we have two funds, both the India fund and the US fund, and a total AUM of $120 million. We launched this fund in 2021, and we actively investing in both India and US. So just kind of giving my perspective, post-COVID, we saw significant value correction, as you know, in the market, and especially investment climate has become more, I would call it, investor friendly, because of the, some of the companies really where, valuations were, pretty high, and some of the companies, did not have a product market fit. So what we are seeing right now, last 12 months, companies already had good product, weather the storm very well, because these good founders also focused on building the product, building their customer base with the good logos, and also looking into, because they noticed what's happening with the VCs, and they also started really looking at path to profitability. They may not be profitable today, but path to profitability. I think with that, really, we are seeing companies are getting funded. And I always say, a good founder, good company with a good product, a good market fit, they'll always find from investment from VCs, because there's a lot of money available sitting on the sidelines right now, where VCs are looking to make sure find good companies. So I think it's definitely created a opportunity, especially what we are seeing. Companies have looked at what's happening in the market and adjusted to the market. They're able to get funding. So, for example, hopefully we'll be able to announce next week actually, but we're almost funding 2 companies in India just last few months right now. So we've been very aggressive, and with our thesis, we're able to fund. We'll talk about our thesis and all later. But to answer your question, I think really, yes, there was definitely a winter, as you mentioned, because what happened, a lot of founders also, they got shocked hey, we were getting this much money, this kind of valuations, this type of really multiples, but now we are not getting these multiples. We don't want to, also, take investment from VCs. But now I think they realized, good founders. Again, I go back to, founders who have built companies before or really learned, even they are first-time founders, they need to change their strategy. And some of them listen and doing very well. Some of them, we didn't invest, but we advised them what they need to do. And we have seen within 1 year, they have changed and increased the revenue. And we are able to fund those companies right now.
Thanks, Mr. Dayakar. Mr. Nishant, you are one of the few startups that are able to consistently raise funds and grow. As a startup navigating this landscape, what are the biggest challenges you have faced in securing funding?
Yeah, I think, as Dayakar said, I think you got to get the fundamentals right. You got to make sure you have a product market fit. You got to have a product that actually provides tremendous value. And you also have to have the market sort of be there, right? So just kind of get back to basics. It's not growth at all, growth at any cost. Like just kind of keep spending and try to get the growth. You got to have your product market fit. And then I think just the business sort of basics, in terms of spend, control that. And so I think, from our perspective, I've been in this sort of startup world for almost 17 years and had other exits actually without even raising in the past. And I think the experience of like seeing a couple of downturns. I was at the tail end of the .com bust at the very early of the career, and then the 2008, 2009 when I first started my venture, like the entrepreneurial journey. I think just the way sort of things were working and the way the valuations were going up. I think for us, it was pretty evident that the market is, it's just not sustainable. So, as a company, we, like I said, just went back to kind of basics, controlling cost, focusing on the customer, focusing on the product market fit, getting the product right. I think all those things for us, it managed, we just managed those things really, really well. And like Dayakar mentioned, the companies that have done that pretty well, the funding is there. And our raise was in 22, end of 22. So, it's hard to time the market, but it was at that point, it was pretty evident. The valuations were just off the roof and basically not sustainable, right? So for us, it was very important to, we didn't necessarily have to raise at that time, but as a business, we were doing pretty well. Our product is a digital transformation product. So we did quite well during the pandemic. And so we just decided to go raise and make sure that we have capital to, sustain this downturn. So I think, again, to Dayakar's point, if your fundamentals as a business are right, I think there's funding available out there.
To add to that one, really, I would say this. Maybe I coined or borrowed somebody. This other painkiller versus vitamin, right? So if they're really giving a painkiller, people definitely use it. So good time, bad times, they do need a painkiller. So if they're building a vitamin, that's where they will have an issue, not weathering the storms.
Yeah, interesting perspective, Dayakar. I attend a number of startup conferences. I meet VCs and startups. The general impression is that good startups, quote unquote, good startups, they continue to get funds despite a winter, despite a summer, despite a spring. What are the key metrics at Dallas Ventures do you analyze when evaluating startups in this depressed environment? Have your criteria become more stringent now than before?
Thank you for that question. I think we stick to our principle and discipline. Really, that really helped us. Even though we closed actually fund in 2021, we were very careful. We actually deployed less than 10% of the capital in 2021. Then 22 also will more cautious. In 23, we became very aggressive. We invested close to 23 itself, like right now, I would say close to 10 companies, India and US together. And now in 24, we think really is a good time to invest. We are finding those good companies. So we did not really deviate from our thesis at all. Our thesis is I'll talk about, quickly, but that thesis helped us looking at to make sure what we look for a company. I kind of call it 3 T's, team, traction, and total available market, right? So we also invest in a B2B SaaS companies. We did not deviate from that. Within that, we also invest in what we kind of call infrastructure software, maybe 50 to 60%. Other, 40 to 50%, we invest what we kind of call companies really building intelligent applications, which is, can be, bought by your operation technology buyers. This could be CROs, basically CFOs. When I say infrastructure software, those are IT buyers. And these are the buyers we kind of call a VP, engineering, CTOs, CIOs. That's where our sweet spot is. Because a lot of our connections are in that area, we're able to help our portfolio companies. I can talk about almost 1 hour, whatever we have done in the last few years. I'm happy to tell you, some of the companies, how we, were able to invest when they were doing, less than $1 million revenue or close to $1 million revenue, how we are able to grow them to 10, 20, or $30 million revenues last few years. So with focusing on that, thesis and discipline helped us a lot. Now, what we are seeing really, we need to make sure really this founder team as you mentioned, right now, the team has ability to also play the field. When I say they play the field, from the beginning, they are willing to build relationships with really other founders, especially maybe they're competitors. Some of them could be large, small, or same size competitors. Are they really building relationships with the other founders? Because I'll give my own example. I started my company, JP Mobile, in 1997. It's a long time. And I happened to be right time, right place in 2000, raised $55 million, to be honest with you, and a PowerPoint presentation. So I was not smart, but really just happened to be right time, right place. But, when the 9/11 happened, the market crashed. Luckily, I was able to, grow the company. But eventually we were able to merge with one of our company called Good Technology, because I had a good relationship with the founder, Joel Jewett. So that's what really we look for the founders, do they have a humility and resilience to make sure sustain those really what we call it, this macro level changes.
Nishant, over the past 3-4 weeks, I wrote at least 3-4 reports. Gartner says the overall global IT spending is going to grow by 8%. So that is big news for IT industry, not only IT industry, for startups also. So part of that will spill over for startups as well. And there are some other research firms like Global Data. They say the first quarter performance of major markets like US, APAC, and Europe also, the funding has plummeted significantly, 37% in US and other parts. But India is the only country that has, it seems, weathered all this. The number of deals has actually not fallen down. They stayed as it was in the first quarter of last year. I think this is a good news. What, according to you, what qualities or initiatives that make a startup stand out to investors in this kind of market?
Yeah, I think it goes back to what Dayakar said. I think the team, right? The team, if the team has experience, I would say that's absolutely important. How they're doing, how they're performing in this sort of market, right? Companies that continuously grow their top line, right? And are efficient with the spend. I think both those things are absolutely important, right? And for startups that are the ones that control their CACs as well, in terms of marketing and sales spend and the dollar that you're getting in return, I think that's absolutely important. Yeah, and then it's all about sort of the execution. I think if the company in this market is able to do really well, then I think I love the painkiller versus vitamin kind of thing. If you have a product that's, killing the pain, I think it's a lot more valuable. So you would be able to grow that even in this market. And if you, manage that execution really well, and then you control your cost really well, I think, those startups will definitely shine in this market. And that, in some ways, this is like if you get all those things right, if you get the product market fit, you have a product that's like, managing pain, if you will, for the customers. This is like the time to actually accelerate, right? This is an opportunity sort of time, because all the other competitors, everyone else kind of is struggling, right? And if you're managing those things well, if you're executing it really well, this is like an opportunity for you, especially given, if you're already selling globally. And as you mentioned, India is doing pretty well. So you kind of shift your motions a little bit towards India, and, and it's a global market on the digital transformation side. And you should be able to, take benefits out of those markets that are doing well. And then you you can shift back and forth as needed. So yeah, I would say just execution and the fundamentals, just get those things right.
So Dayakar, see, all the VCs without any exception, when I during our interactions, they said there is no shortage of money. But what they say is you have to be there in the in times in a crisis like this, you have to be on the top of the charts in order to get the funds. There is no dearth of funds, but you have to be there on the top of the mind share of the investors. But certain sectors, it seems, they are weathering the storm very well, despite odds, despite all the roadblocks. Which are those sectors, and where are VCs focusing their attention now, and why?
So I think what I have seen, I spent almost 3 months in India right now, because as I said, we have a fund over there, and we have a pretty good sized team in India right now. India, and if you look at the broader level, I think there's mobility and drones and EV and some of the, these technologies have definitely, and the good news is, the Indian government also opened aerospace, for a private market. And the deep tech stuff, I'm seeing like really large, did not happen in India, but now it will start happening. So those are the sectors really definitely taking a lot of funds. But coming to kind of the areas we focus on the B2B SaaS side, we definitely see a huge opportunity again, companies, especially in India, they really look at, with their expertise, what they built the last few years, instead of getting scared of, Gen AI and whole AI, how they can really benefit from this, they're building an application, how that application could be more intelligent by using the Gen AI stuff, or also within, with the Gen AI and with ChatGPT, it has created a challenge and also opportunities for startups. Challenge in the sense, like right now, as you know, every CIOs, CTOs been bombarded by CEOs. Hey, what are you doing with AI? Right. So they have AI in their presentations right now. So, right. So some of them are rushing to implement the stuff, but there are issues like ethical AI, especially how you make sure there's no bias in your models and all that. So what we kind of call really this infrastructure layer, there's so much opportunity. There are opportunities in the e-commerce and all that too, but I feel like those are too many players are playing in that area versus really, if you really focus on I kind of call almost like a, I'm pretty sure you heard about this stuff, right? People, when the gold rush was there, people who made the shovels made the money, right? So the people in our software industry making that building blocks to run your infrastructure or to make sure infrastructure is secure, those are the ones really I think is going to do really well. So I think, those are areas we are looking at, ethical AI, cybersecurity, cloud ops, those are, we are able to, invest and also seeing those companies. One of the example with one company we invested, which was actually started by 2 PhDs in London. As you can see, we invest, all over the world, not India, not the US, wherever good founders are there, that's where we go. So when these 2 founders started in Oxford, a company called Holistic.ai, they focus on ethical AI. So how they help the HR department, CIOs to make sure their models are not discriminating in a hiring practice or anything like that. So their revenues kind of shot up like a 400 to 500% within last 1 year. And so we're seeing, good opportunities like that. And in India also, we are about to almost invest in ML ops in a company, but we could not. Hopefully, we'll be able to find more companies in that space.
Okay. Nishant, what are the top mistakes that startups do? And what is your advice to startups to overcome hurdles like these in their journeys?
Yeah, I would say, I mean, the top mistakes, with being an entrepreneur, you're always looking for an opportunity and want to, pivot and try and new things and move to new areas and stuff like that. I think focus to me is absolutely important, focusing on sort of your solution that you're bringing into the market and kind of sticking to that. And one of those, I always want to, build new things and go into different areas and all those sort of stuff. But I think focus to me is kind of the top mistake, and the second is just managing your P&L effectively. You got to be pretty disciplined, I would say, in managing that. And it's, it's all different levers, but you got to make sure, especially in this market, you got to have sort of a proper, you got to give yourself ample time to succeed, right? You might want to make a few changes here and there. So you got to give you ample time to succeed. So those decisions based on some of the P&Ls, I think is very important. So if you don't manage that effectively, you could run out of money, you could choke your business, that sort of stuff. So I think to me, focus and then again, on the financial side, being, disciplined is the top sort of mistakes people make.
Thanks, Nishant. Dayakar garu, any closing remarks?
Really seeing, especially in India, what's happening. There's so much talent available, and most of these, technical, people, especially as got good training, from all the big companies, working at big companies, building products for other people. But now they're getting out and building products, by themselves and for the whole world. In my opinion, Indian SaaS companies will dominate the way the IT companies have dominated, last, few years. They started very small, as like when I talk about Wipro, TCS and all that, 30, 40 years back, like a lot of people did not even know their names. But now, all over the world right now, everybody knows those 4 or 5 big brands from India. I think you're going to see same thing happening from Indian companies. Like we already started right now with companies like Zoho, Freshworks, Mishu, and so many companies really coming out and solving problems for the world. Because they do understand the vertical and they understand the domain very well. Not only technologies, what I have seen impressed with, they're able to sell from India, right? That's a good thing about, they don't have to be here, they're already selling from India. So one thing we have seen, one of the companies we invested in Disperse, they not only, sold in India, but also in Asia, but now they're coming to the US market. So we're able to help them, getting a first customer here, a CRO here, and getting the funding too. So that's one thing really, I love to work with the companies, coming from all over the world, as I said, but especially India has a great market right now.
Thanks, Dayakar. Thanks, Nishant. There is hope, and startups, they don't need to lose heart. Niche areas like ethical AI, cybersecurity, deep tech, products around, solutions around these have demand, and because they can solve the problems of the world. As Mr. Dayakar says, SaaS companies of India are the future, like IT companies in the past. As Nishant says, startups should focus on managing their P&L well and focusing on their solutions very well. So there is hope. Thanks very much, Nishant and Dayakar, for your time and insights. Thank you.
Thank you, KV. Thanks for taking your time. Nice seeing you, Nishant. Actually, hopefully I'll see you tomorrow. I'm going to be in Austin tomorrow.
Let's figure that out, KV. Thank you for having me on.
Sure.